company. My name is Haley Gant. I am one of our certified IRA specialists, and I am super excited to have Robert Martinez from Rockstar Capital here with us tonight. Robert has had a crazy week with everything going on in Texas, the pipes, the plumbing supplies. So I'm super excited you're able to take time out of your busy week to come give tonight's presentation. Before we get started, I do just have a couple of quick announcements for you guys as we kind of let people get signed on here. We do know that we get a lot of new people watching our webinars every single week. So if it's your first time here joining us, welcome. We do these webinars every Tuesday, Thursday. We do some at 12 p.m. during the week. And we also have a self-directed IRA Saturday webinar series as well. So if you want to rewatch tonight's presentation, as well as any of our other presentations that we give here at Quest, be sure to head on over to our YouTube channel. Our YouTube is a really great resource for pre-recorded videos that we post pretty much every single week, as well as all of our live classes that we host with all of our different guest speakers pretty much every single month. Whoops. Oh, sorry, guys. Give me 1 second. All right, weird thing popped up there. All right, let's continue with the presentation. So quick commercial about Quest. Who is Quest Trust? We are a self-directed IRA custodian based out of Houston, Texas. And basically our specialty is that we help educate investors pretty much all across the US how to think a little bit differently about how you save for retirement. So at Quest, we have about $2 billion in assets under management, and all of that is actually privately held assets such as real estate, notes, and private placement investments that our clients actually choose to hold in their IRAs. And it's a really great option for a lot of people out there because it allows you to truly diversify your retirement portfolio and kind of have some of your retirement funds allocated in other assets outside of the stock market. So very important here, we do have a disclaimer. Quest does not give tax, legal, or investment advice. We give a lot of education. We bring in a lot of different guest speakers to teach over various educational topics, but make sure that you are doing your own due diligence before you enter into investments, and be sure to seek the proper legal counsel or CPAs or title companies. Make sure you're working with the right professionals. When it comes to the IRA education, we are the go-to, but just make sure that you are taking those proper precautions whenever you are investing with your IRA, or even if you're investing with non-IRA funds as well. So the IRAs that we hold at Quest legally are exactly the same as any IRA that you have at any other custodian. The only difference is the types of assets that your custodian allows you to invest in. So most traditional custodians like Fidelity, Charles Schwab, they are only set up to hold publicly traded assets, things like stocks, mutual funds, CDs, kind of things like that. Where at Quest, we specifically hold privately held assets. So self-directed IRA is really just a marketing term. And as you can see here, there are a lot of benefits to having a self-directed IRA. Before I kind of go on and on about this, I will let you guys know we do have a lot of other educational classes that actually go through these basics and foundations of what you should know about self-directed retirement accounts. And we have Nicole Bako, actually one of our other IRA specialists, online with us tonight. She is moderating tonight's webinar. Nicole is awesome. She is one of our newer IRA specialists, but she is a rock star. She has a pretty extensive background in both banking and retirement accounts. So be sure if you have questions, reach out to Nicole. She's a great resource for you, and she'll be posting some of these links to our other educational resources that we have there in the chat. Now, Nicole and our other IRA specialists can also be a great point of contact for you as you are learning about which type of account might be best for you. Again, I don't have a lot of time to spend on this tonight, but if you have not gone through a one-on-one consultation with one of our IRA specialists, reach out to us, schedule a consultation, and we can actually walk you through kind of like your situation, what you might have going on between both you and your family, and kind of let you know which types of IRA accounts you might be able to qualify for, how you can partner these accounts together, and overall maximize this savings in your retirement that is growing tax deferred or completely tax free. Now, these are just a few of the many investment options that you have with an IRA at Quest. Tonight, we are actually going to kind of focus in on this section here in the middle. So tonight we're going to focus on multifamily kind of passive investments through private entities, things such as LLCs, commercial deals, apartment complexes. But that is just a few of the many different options that you have with your IRA. It is important to note, Quest, we do not provide investments. We provide a lot of educational opportunities and networking opportunities as well. But it's totally up to you where you choose to invest your IRA funds and how you choose to structure those deals. Now, speaking of our education, and this is actually kind of my specialty, I work pretty closely here with our entire marketing department to help to put on all of these events for you guys and to help keep our education among the top in the industry and relevant to what's actually going on in real estate right now. So, we do have a lot of educational classes. I'll get to those on the next slide, but I do want to highlight an event that we have tomorrow night. And this is our Battle of the Case Studies event. We host this maybe about once a quarter. And this is a really fun event. We actually bring out our judges, and then we have different guest speakers that each bring their own case study. They each have 10 minutes to present their deal, kind of educate on maybe what they learned, what went well, how they were creative with it. And then we have Nathan Long, Jeff Watson, and Tom Barry acting as our resident judges. So they'll actually get to give our contestants some feedback. We'll score them all at the end. And you get to learn about a lot of different case studies. And it's kind of a fun battle as well to see who has the best case study of the night. So I do have a QR code. You can also register for this through our website. You can find all of our webinars under our website, go to events, go to webinars. You can see all of this information there. But I love QR codes, especially in today's world when no one wants to touch anything. QR codes are great. Now, be sure to check out our other resources. We have a great YouTube channel. We have an education center on our website. I've already kind of touched on the other webinars that we host, but I do want to take a second to tell you guys about our virtual networking happy hour. This is kind of like my event that I started back in August when, I was getting calls every single day of people asking me, "Hey, I have deals or I have money I need to invest. Where can I network with people since there's no in-person events?" So, kind of out of necessity, we started this virtual networking happy hour. It is the first and third Wednesday of every month through Zoom at 6:30 p.m. Central Time, and we get an average of like 50 to 70 investors from across the US on every happy hour. It's a lot of fun. And we all kind of have a glass of wine or have a beer together and kind of talk about what's relevant at the end of the event. So be sure to check out those resources. We also do have our next Questcon live planned. This will be April 16th and 17th. Tickets are in pre-sales right now. This is one of the few paid events that we have. It's a bit of a larger scale than just our weekly webinars that we host. And we'll actually have about 20 different guest speakers over the course of 2 days, all online. And this event will also have its own exclusive virtual happy hour before the event as well. So be sure to get your tickets to QuestCon. That will be a lot of fun, and that is quickly approaching us. But reach out to us. We have a lot of resources. We are always happy to answer questions for you, whether you are ready to open an account, you have your investment identified, or whether you are brand new and you're really just looking for more resources. At Quest, we don't sell investments. We are completely neutral. So it's always free to call us, have a consultation, and pick our brains. So that's it. That's all I've got for you guys tonight. We do have a referral program as well. So without further ado, I would like to go ahead and pass the torch off to Robert Martinez. Robert, it's always great to have you here. I love your energy, and I know you, like many of us in Texas, have had a crazy week this past week. So I'll go ahead and pass it off to you. If you guys have questions, put them in the Q&A box, and we will be answering those at the end. Robert, great to have you here tonight.
Haley, thank you so much. It's exciting to be here. Man, it has been a sight the last week. We have
Yeah.
spent the time at Rockstar Capital battling pipe breaks across the 22 communities in our portfolio. I think I got more pipe breaks in the last week than I've had in the last 15 years. And when we have a pipe break, that's a massive issue for our residents. My heart goes out to them. Fortunately, 90% of our pipe breaks were outside. They were in the laundry room because when some of the properties that we bought were designed, they weren't insulated. And so when that cold snap came, like we've never seen before, the pipe snaps. and it was quite an adventure to get the parts because everybody and their mother had pipe breaks and needed parts all at the same time. Very fortunate. We actually ran out of parts, and on what was it, Sunday night, I guess it was, at 10 p.m. I used the power of social media, and I got all the parts that we were missing within 12 hours by asking for different supply houses who maybe were friends of mine or somebody knew somebody else. And so thank you on behalf of Rockstar Capital to all those people who were able to connect me with the right supply houses to get all of those parts. Thank you to our supplier partners who donated pallets and pallets of water while we were getting those pipes addressed. Thank you to all my team, my gosh, because it was like all hands on deck for from Wednesday through Sunday, trying to get these pipes under control, and all of my staff and what have you. And again, thanks for having me tonight, and my girls, Natalie P and Natalie T, for being here with me tonight and staying here a little late at work while we do this presentation. All right, so I'm excited though, because I feel like this is a back to normality. Today, we're going to talk a little bit about multifamily investing. Specifically, the subject here is how we turned a $100,000 investment into $1.2 million in a 10-year horizon. Oh, 1 second. Let me, I'm doing it wrong. There we go. Okay. So a little bit about me. My name is Robert Martinez, and I'm the CEO and founding principal at Rockstar Capital. We were founded in 2011. Since 2007, when I joined multifamily, I've been part of 33 different acquisitions. Along my time, my company, Rockstar Capital, has earned 18 city, state, and national apartment association awards. When you win those kind of awards, it's for a reason. We make a lot of money for our investors. Today is one of those success stories on how we turned $100,000 into 1.2 million. We do that by doing cash out refinance events. We've done 13 of those in 9 years. Along with that, you get a little claim to fame. I've been featured in Forbes, Money, Entrepreneur, and CNBC magazine. In fact, next Wednesday, I get my first national media appearance. CNBC is going to be interviewing me for 30 minutes next Wednesday on the 4th. I'm super excited about that. And I'm also the first ever 2-time National Apartment Owner of the Year. Matt, will you just help me with it? Okay. All right, so a little bit of our success, our story, and I'm going to go very brief on this. I want to get into the meat and potatoes, and I definitely want to get into Q&A. Q&A is where you're going to learn the most. Ask me. If I don't cover it here, please ask me. That's where we get we measure the benefit of the success of this presentation. Again, we were started in 2011. Like a lot of people, I had a corporate job. I wasn't happy with what I was doing. I realized that I wanted to make here, but my employer wanted me to make here. And so I began looking for other opportunities of supplementing income that I felt my employer as a commissioned salesperson was taking away. And I found real estate, and I joined a real estate club. I'm a big fan of real estate clubs. I think before you invest in anything, you should invest in yourself, and you should try to join a real estate club. In my time today at Rockstar Capital, we own and manage 22 different apartment communities. As I said, we have 18 city, state, national apartment association awards. Those communities total out to 4,220 units. That's a lot. And it's a lot of fun, right? Because, apartments give me cash flow. They give my investors cash flow. They give us a lot of security. But when something happens, we like pipe breaks. We have a lot going on. Most people didn't have 350 pipe breaks that we had to deal with. But you know what? It's one of those freak things. I feel like living in Houston, Texas, we've gone through a lot of freak events the last few years. But it's okay because it's done well for us in the long term. We've had 13 cash out refinance events. What does that mean? That means when you give me your investment in a period of time, we do a refinance out, just like you would refinance cash out of your house. And I return that equity back to you. I've done that 13 times. So you get your cash back, you get to redeploy it again, and you still own this original investment. And I'm very excited because our company's had tremendous success the last few years, and we've been on the prestigious Houston Business Journal fastest 100 growing companies in Houston for 3 years in a row. Super excited. All right, so why multifamily? Well, do you trust the stock market? Did anybody pay attention to what's happened with GameStop and Robinhood? A group of investors were artificially holding down GameStop, the GameStop stock. Then a bunch of investors got their money together and bought it and raised the valuation of that. And then one of the big players that were, where you would use to buy these stocks didn't want to let you sell your stock out because it was going to hurt their investment. It was going to hurt their hedge fund. When I hear that kind of manipulation, it tells me the game is rigged. I don't want to put my money when I don't know what's going to happen. How many times have you invested in the stock market and you were doing really well when you went to bed, and the next morning you woke up and you realize, wow, my stock has gone down 12%, and you have no idea why? It wasn't like that the day before. I don't like volatility. I don't like volatility in my business, in my relationships, and I don't want it in my investments. I want stability. Multifamily offers stability. All right. Because multifamily is real. Real estate is real. These are the 22 assets that we currently have under management. Again, I'm an owner operator. I did the underwriting, I did the acquisition, and I do the operations with my team here at Rockstar Capital on these 22 deals. The two at the bottom there are deals that we sold. The last one we sold about a year ago, and in a 7-year horizon, returned 693% to the partners. But what I see here is I see safety. I see cash flow. I don't have to get up and work in the morning. I can stay, I can take the day off. I can do whatever because my investments are making money for me. I've got 22 safeguards that protect me every single day. This is what I want to get across to you guys. Get your money invested in something other than the stock market. There's other opportunities, not Bitcoin. I don't know how Bitcoin works. I don't know what makes it go up. I don't know what makes it go down. I know Musk put money, his company's money into it, and it makes it go up. I don't know. But I tell you what, I know how real estate works. And it's not risky if you know what you're doing. It's not risky if you follow the business plan. And on the next slides, I'm going to show you what the business plan are. Multifamily works because it's stable. It's stable and it produces long-term cash flow, and it's resilient. And you're saying, what do you mean by resilient? All right, let's go. We just survived COVID. During COVID, there were winners and there were losers. The biggest winners were Netflix. We all know that. We all saw they found like millions and millions of new subscribers and increased their valuation of their business because everybody was at home. Amazon was a big winner. Everybody was buying packages. Everybody was bored. So they're on Amazon buying things. Business has to continue. Zoom was a big winner. We're on webinars like this. Zoom became the everyday way to communicate with your team. The other big winner, apartments, multifamily. Because what do you need for your Netflix, for your Amazon, and your Zoom to work? You got to have 4 walls and a roof. People will always need a home. And that's where the stability of multifamily comes from. Multifamily produce cash flow. We want income producing assets. We want to put our money into something and we want it to return a check quarterly or monthly. Stocks, they don't do that for you. You put money in it, you got some dividends here and there, but it's pittance, right? You hope for stock gain. I don't worry about just stock gain. I don't just worry about the gain of my apartment complexes. We also want monthly and quarterly cash flow. Now, the way that happens is by understanding the NOI. Some of you may have got this in school, some of you may not. The NOI is simply put the income, all the rent collected, minus the expenses, all the things that you need to keep your business alive, equals your NOI. And that NOI determines valuation. And that leads us to the magic formula. The magic formula, next slide, please. The magic formula is how we value apartment complexes. The magic formula is how I've taken my net worth from about $800,000 and turned it into tens of millions of dollars. Is understanding this. Understanding this formula turned me into a 2-time National Apartment Owner of the Year. It's very simple, and I'm going to teach you right now the magic formula on how you can get wealthy with multifamily investments. $1 of NOI. Remember, the NOI is rent minus expenses equals NOI. $1 divided by the cap rate. In Houston, Texas right now, when I want to buy a deal, it's about a 6% cap rate. That gives me the valuation. So $1 divided by 6% cap equals almost $17 of valuation. Where else can you do that? If you put $1 into a stock, do you audit and it goes up in value by $1? Did you create $17 of valuation? No, you created $1. In multifamily, if your NOI increases by $1, you've created $17 of valuation. On this next slide, I'm going to show you an example of how that works. Here's a quick example. I actually have two examples. Do you think a $10 rent bump is reasonable on a 200 unit property? It is. It's pretty. It's not even a nuisance bump. It's the cost of living. A $10 rent bump on a 200 unit property equals $2,000 more of income. That $2,000 times 12 equals $24,000 of new income. That $24,000 divided by a 6% cap has created $400,000 of valuation. This may be one of the most important slides. I really want you to understand how a $10 rent bump on a 200 unit property created $400,000 of valuation. On the next slide, we're going to make the numbers a little bit bigger. $30. So what we do when we buy one of our properties, we're going to go in there, we're going to replace the air conditions. We're going to make sure we do a water conservation program. We're going to do a lot of things to make it more energy efficient. But we also want to get the benefit of that. And we want to give the residents a low cost approach to all their utilities. So we charge what's called a flat rate package. Let's say we charge $30 on a flat rate package times 200 units. You created $6,000 now per month times 200. You've now got $72,000 of new NOI. And that NOI divided by a 6% cap is now $1.2 million. So on the previous slide, I showed you how a $10 rent bump on 200 units created 400,000. Now here's a $30 increase of NOI, which is coming from a flat rate utility charge, is now creating 1.2 million of valuation. Now, when you add all of this together, this is a typical plan. We just bought a deal in 2016. We refinanced it. We did one of those cash out refinance events. It was actually number 13 that we did in 2020 during COVID. If you add all the different things that we did, it created 10.6 million of valuation. A $30 rent bump. I'm sorry, $30 flat rate utility charge, $35 for throwing washer and dryers in there. Rental increase, right? We had a 3 to 8% rental increase. Valet trash, $10 charge per unit. Covered parking, $15. Low flow toilets. I want to go in there and I want to do a water conservation plan. I want to be healthy to the environment, but I also want to add to my bottom line. I want to make sure that I reduce my expenses because it's not just about income, it's income minus expenses. I want my income to increase. I want my expenses to go down, and that makes my NOI go up. All of that combined created $10.6 million in valuation in 4 years. If you look at the number below, we purchased this deal in 2016. It was 272 units. We paid 20.4 million together with my investors. So I think about 300,000 into this deal. My investors, I raised the rest of that money. So 6.85 million, all came out. We put our money into this deal. We created a new valuation of $31 million. We increased the value from 20 million in 2016 to 31 million in 2020 in 4 years. And then we did a big refinance event and we pulled out. We did a new loan against our old loan, pulled out the equity, and returned nearly 100% of the equity back to our investors. That is how the magic formula works. This is how we get wealthy owning apartment complexes. Now, how can you do that? Well, many people use cash. They put $100,000 cash, but a lot of you, just like I did, have 401ks. And those 401ks get left behind at companies that you once worked at, and you turn them into IRAs. Did you know that the stock market is not the only thing that you can invest with your IRA? You can do what's called a self-directed IRA, and you can invest that in whatever vehicle of choice. Let's say you want to invest it with me in owning apartment complexes. You can make a tremendous amount of money. In fact, more than 10% of Rockstar Capital's last deal was funded through self-directed IRAs. So when you're ready to do one of those deals, you don't want to miss out. You want to have your money ready to go. You want to contact Quest and you want to create the process of getting your self-directed IRA. It's a little bit of paperwork, but these guys are pros. They know what they're doing. They've been doing it for years. We have a significant amount of I've raised about 120 million in the last 10 years. And a good portion of that, at more than 10%, is IRAs, but it takes a process. You don't want to miss out on a deal when it's ready to come. So make sure you get your IRA working. All right, so today's case study, now that I showed you how apartments work, is I'm going to show you how investor X, I can't tell you his name because I didn't get papers signed off, but this is a real investor. He's been in our office multiple times. He's a longtime friend of Rockstar Capital. I'm going to show you how he turned $100,000 investment into 1.2 million owning apartment complexes. A little bit of background on my friend. He worked at IBM for 20 plus years. He invested his 401k with a stockbroker, lost over 2/3 of his savings during the Great Recession. He only had a little bit left. He learned about self-directed IRAs on the radio, contacted a company like Quest, and turned that into turned his $100,000 investment that he had in his 401k into a self-directed IRA. I met him through a real estate club. As I said again, I didn't just start this and decide I'm going to learn how to buy apartment complexes and figure it out on my own. I joined a real estate club. Before you invest in anything, you should invest in yourself. Pay the money, it's worth it, and figure out how apartment complex investing works. He met me at this club. He put his last $100,000 that he had in that 401k after he self-directed his IRA into my very first deal as the owner of Rockstar Capital, 2010. He, over the years, he reinvested every single dollar back into the IRA, because when you have it in an IRA, it's not cash. It doesn't go to your bank account. It goes back to your custodian. It goes back to your balance there, and it sits there until you're ready to grow. And really, it's kind of cool because what happens is if you do cash, it goes back to your pocketbook and you might eat it, right? You might spend it. You might do something with it. When it goes back into your IRA, it's literally like a giant savings account. And it just kept adding every quarter. As we got distributions, it went back in there, went back in there. After we do, and along with his cash flow, when we do these big refinance events, these big lumps of sum would come in there, and they would really make that bank account or that bank balance grow in the self-directed IRA. He would then take that money and reinvest it into the next deal. And on the next slide, I'm going to show you how he did that. So he bought his very first deal with me in 2010, a property called Water Chase. Within a year and a half, it was less than a year and a half, it was about 9 months actually, we did a big refinance event. This is during the recession. I was buying deals super cheap. I was creating the value. It was coming really quickly. He redeployed that money into the next deal, North Lake Manor. Again, that's another deal that I bought really, really cheap, $15,000 a door. Within a year, again, we're doing another refinance event, and you're seeing what's happening. You're following the pattern. 2012 did the same thing again. Within a year, we're starting to do the refinance events, but we're also doing cash flow because he went from 1 deal to 4 deals. So a combination of cash flow and big refinance proceeds kept being invested in every single deal. He's only put $100,000 with me. That was his initial investment. That $100,000 today has turned into $1.2 million of valuation. On top of that, I think he makes something like $80,000 to $90,000 a year in cash flow that goes into his investment account. Today, he owns 11 deals. He actually owned 13, but we sold 2 deals. He's active in 11 deals. That $100,000 turned into 13 deals. We sold 2. He's got that money went back into his account, and he still has 11 more. And he's waiting. He keeps calling me, waiting, looking for me to invest that money into the next deal. His investment was sheltered from taxes by leaving his money alone in his IRA. It's a tax-deferred strategy. Utilizing his self-directed IRA, it's helped to facilitate that rapid growth because he didn't eat it. He didn't take it out of the account. It stayed in that balance, and he just kept taking the proceeds, and he just kind of like laddering it up, laddering it up, laddering it up. So why invest through a self-directed IRA? Tax benefits. Look, I'm not a tax guy, and I don't claim to be. Talk to your tax professional, maybe even talk to Quest, but it is a tax-deferred savings strategy. You also have a choice where to invest. It's not just like the stock market. You can invest wherever you want. So this gives you a chance to take control of your retirement plan. I can promise you that if I put my money in the stock market, I would have lost a lot. I would have gained a lot, but there's no way I would have what I have today. I mean, I literally went from an $800,000 net worth to tens of millions of dollars owning apartment complexes. There's no way the stock market could have done that because, again, I understand the NOI. I understand the magic formula. I understand that $1 equals $17. And so that was able to help my investments grow. Along the way, it's tax deferred. You know what? I don't pay a lot of taxes. I mean, I do pay taxes, but then I get it back due to the benefits of owning apartment complexes, such as depreciation. And depreciation is huge in the apartment world. Last year, they were giving out COVID checks, right? Yeah, I got one. I got a COVID check. You're probably asking you, how did you get a COVID check? It sounds like you have cash flow coming from 22 different apartment complexes. You're probably past the threshold, right? Yeah, I was, but my money is taxed differently. And with the depreciation, I didn't show that I was above that number. And I got a COVID check. These are the benefits. These are the secrets of the rich, should I say. There's a reason why that tax law is in there. And there's a reason why you're not taking advantage of it, because you haven't been exposed to it. You haven't been educated to it. Mom and dad didn't tell you this unless they own real estate. Your mentors, your teachers, your university professors didn't tell you that unless they own real estate. I never took a class. I have an engineering degree from Texas A&M. I never once took a class or met anybody that explained to me tax deferred strategies, owning apartment complexes, until the day that I joined that real estate club. So when I say that it's very important to join a club and get around like-minded people and absorb the knowledge, I'm serious. Understand how that works. All right, so for more information on multifamily investing, please hit us up at rockstar-capital.com, or for more information on self-directed IRAs, Quest Trust Company. That's a great company. We've been using them a long time. They're a proven provider, proven custodian in this field. And hey, time for Q&A. Haley, I'm ready to go. Do we have any good questions?
Awesome, guys. If you do have questions, be sure to send them to the Q&A box. Robert, I don't even know how many doors you own and manage, but you guys do a lot of the property management side as well. So
Yes.
if you guys have questions, be sure to send them now. We always have people that ask this question. Obviously we're not here to like pitch investments or anything like that, but how do you guys structure things? Do you have to be accredited? Do you accept non-accredited investors? Kind of just give us an educational standpoint on that.
Absolutely. So in our portal, we will ask you a series of questions if you wanted to invest, and you can either choose accredited or non-accredited, and it's based on a different criteria. Accredited means that you have a net worth in greater than $1 million, or single income greater than $250,000, or joint income, I believe, is $400,000 if you're married. So that qualifies you, but it doesn't matter because you can invest both ways through apartment complexes. It's just how we set up the organization, how we set up the structure.
Mm-hmm. Definitely. And I know we were kind of talking about this a little bit before we got started, but we don't really have any questions rolling in, but I have a few questions. Hopefully it'll help to spur some conversation here. But, kind of talking from the property management side of things lately. And, I know you guys have done a lot for your residents in the last week. If someone out there is looking to invest in a multifamily, what advice would you give for someone that's looking to either like manage their own properties, or what should they look for in a manager? Let's kind of talk about that a little bit, because I think that's really interesting as a lot of people are starting to move into multifamily investing.
Yeah, there's a lot of companies out there that are teaching education for sure. And there's a lot of companies that tell you there's classes you can take on how to raise equity and what they call syndication. I came from a real estate club where they taught me to quit my day job and go work the investment every day. And I'm so happy I did, because that helped me understand the magic formula, that helped me understand what it takes to take care of somebody. And it's really simple, right? I mean, it's basic services. I want to treat somebody as well as I would want them to treat me. So when I come home, I want everything to work. So I focus in my business on basic services. Every time we take over a property, we do a renovation. And within that renovation, the number one thing, our signature item, is that we will always replace 100% of the air conditions. And the reason is we live in Houston, Texas, and it can be 100 degrees plus outside. And the last thing you want is for it to be 87 degrees in your apartment. The reverse of that, we just found out, right, is that you want that heater working as well. So when you replace that air conditioner, you're also going to get a brand new heater. I remember when the power wasn't working, it got really cold in my house, really cold. Well, you don't want that but it's understood because that was Mother Nature. I don't want it to be, where my air conditioner is not working and I can't get the temperature where I want it. So that's a huge thing. Consistency of water supply. That's another thing that just hit us, right? I have residents who are very understanding because they know it wasn't our fault, but the pipes weren't working. Water wasn't coming out, and they were angry. They understood because we're all in this mess together. But when we don't have Mother Nature to blame, you want to make sure that everything's coming out right. So we focus our strategies on consistent services, but you have to sit in that chair to understand what's important so you can create that strategy. I'm not a big fan of just thinking that you can read a book or join a class somewhere and show you how to raise capital. I don't think that if you're not willing to walk away from your day job and raise capital from outside people and guard that capital with your life versus hiring someone else to do it for you, I don't think you really understand how multifamily works. I'm a big proponent of what I was taught to me. Quit your day job. I walked away from 6 figures. I walked away from about 150,000 to sit in that chair making about 32,000. But that was multi-million dollar decision for me. It not only changed my life, my family tree, my kids' life, it changed the life of my investors because I'm not going to get taken advantage of things that I haven't seen. My career got started in 2007 following this strategy. And what happened in 2008 through 2012, the Great Recession? I didn't have to rely on somebody to run my deals for me. I ran my deals. I sat there in that chair every single day with my team, understanding the ups and the downs. So when other little hiccups along the way came in, I wasn't surprised by it. I've seen this before. I understand how to handle that. If you don't have that knowledge, you're relying on somebody else and you're hoping that they have the knowledge for you. So if you want to get involved in multifamily investing, passively, I would say you need to educate yourself. You need to understand and qualify the syndicator or the person raising the equity and make sure that they know what they're talking about and what their track history is and have they ever lost a deal? Have they ever had to do a cash call? If you're going to syndicate deals, I highly suggest that you sit in that chair. Because if you're not really willing to do that, why should somebody give you millions of dollars of their cash?
hmm Exactly. Great points there. This is a good question from Susan, kind of general here, but like, how do you find the multifamily deals? Should I start small? How would you recommend there?
I would do a couple of things. I would, number one, find somebody like myself to invest with and watch. Literally watch the communication they give you, watch their strategy, listen to the presentation on the pre-acquisition presentation, read their investor updates and understand what they're doing and what their focus is and what their business model is, so that when you go do a deal, you have a little bit of understanding there. Obviously, I think you should join a real estate club and get the full education. But besides the education, find someone like myself who's already has a track record, who's raised 120 million dollars of private capital and has done this, and then go do it yourself. Now, maybe you can't do a 100-unit deal or a 200-unit deal. That's okay. Anything 5 units or more counts as a multifamily investment. And I think that if you can do your own deal or you do a small deal like that, you're going to learn some of the same lessons that I learned sitting in the chair running 200 units, right? You're still going to learn how to knock on that door and collect and get your rent money and work with people if they have delinquency issues. You're still going to go through the make ready process and preparing the units. You're still going to go through the move-in process, the move-out process. You're going to learn, but you're going to learn on your own time, maybe without even having to raise any outside money. And you're still going to be able to use the magic formula and turn your $100,000 investment into that multifamily deal into maybe several $100,000 of investment. And then you can scale up.
hmm Awesome. Yes. And great point there. And also, subtle plug, I'm actually doing a webinar with you guys next Tuesday, I believe, March
Yes.
2nd. It was supposed to be last week, but obviously can't do a webinar when no one has power, right?
Okay.
Yeah. So if you guys want to see more of our education teamed up together, be sure to join us next week for that. That'll actually be on Rockstar's platform. So thank you guys for having me on that one.
Yes.
But we have a question here. You talked a lot about the real estate clubs. Do you have any real estate clubs that you would recommend for anyone out there that's looking to do these types of investments?
There's a lot of clubs out there. I really don't want to give a plug to one. I mean, if you live in a major town, like Dallas, San Antonio, Austin, Houston, there are going to be clubs there. Just Google it. Just Google real estate club and find one of choice. I recommend all of them because I think any education is better than no education. I think you need to get around a group of like-minded people. And I think you need to just kind of swim in the Kool-Aid, drink the Kool-Aid. I'd also recommend some books. I think the probably book that I've read very few books cover to cover. I'm embarrassed to say that, but I just don't have the attention span. But I did read Rich Dad Poor Dad, and that changed my life. Then it turned into other little books like The Richest Man in Babylon, which is another quick read, right? But they're so interesting. And then when you join a real estate club, having already read those books, it's like the book came alive because that's what's going on. They teach you this stuff in those books. I think Robert Kiyosaki was a genius. I don't know what he did before, but he wrote these books and it changed the lives of a lot of people. So I would highly recommend reading those books and finding an area club near you.
Mhm. Definitely. And I will say too, at Quest, we work really hard to work with other groups and educators, like Robert and a lot of other people out there who kind of have the same goals that we do to educate investors, provide that high value education. So, obviously we can't endorse anyone, but take a look at some of the guest speakers that we've brought into our events because a lot of them do have their own further resources. And I'm sure if any of you guys want to talk more in depth about that, reach out to Robert directly. He can definitely help to answer some of these questions for you guys. We'll do a few more questions here. I will
Yes.
let you guys know if your question gets really specific or if it's really IRA related, reach out to us after. Let us set up a call and kind of truly walk you through that because I do want to respect Robert's time that he has here with us. But I do like this question here. Eric wants to know, due to COVID-19, are you seeing a lot of financial vacancies and are you getting better deals because of it?
That's a great question. Am I seeing better deals? No. And the reason why I'm not seeing better deals is because the government got involved. When did I see better deals? I saw better deals during the Great Recession because there was no government involvement. It was an equal playing field. There was no enhanced employment benefits for the renters. There was no PPP loans for the management companies and the owners of the businesses. There wasn't all these government assistance and handouts. And when you do that, you make the playing field even. You take away the performance of somebody who's doing a good job from somebody who's doing a bad job. You keep them afloat. Plus, they had forbearance. They have 3 months of forbearance for people who are behind on their mortgage payments, their apartment mortgage payments. So that has literally kicked the can down the road. I don't think that we're going to see the great influx of deals like we saw during the recession because there's a lot of help. I mean, there's a lot of help out there. What I have seen is a lot of renters take advantage of the COVID-19 eviction moratoriums, and I'm not a fan of those. I think if your unemployment is in the 6% range, that means, I mean, look at it. Most of my people should have jobs, right? When I walk around my apartment complexes and the managers are telling me that we have brand new cars everywhere in the parking lot, we have empty Samsung boxes at the dumpster, but yet we have collection delinquency issues, start to make me very irate. And so with that, we've gotten very aggressive in our collection practices. I'm a big fan of reading the back of the lease contract that the renter signed and that you signed. And it basically says, I will provide XYZ services, you will provide rent. And if you don't pay, here are the remedies. Just as, for example, if I don't fix something, they have the right to walk, right? They can tell me, they can put in writing 3 times that I've tried to get this work order fixed and you don't want to fix it. So I'm going to leave my apartment deal. That's their right. I'm going to leave my lease contract. That's their right. But we also have a right too, and it's called landlord liens. And we realize that many of our people aren't paying rent. And so when we go do inspections, we are seeing brand new car keys. We are seeing brand new Samsung TVs hanging on the wall. And we started to lien property. And you may like, whoa, what are you doing? This and that. Like, I'm being an effective business owner. You're breaking your contract. You're lying to the government. You don't have a job, but you have money coming in. And so if you do, and I bring this up for a reason, if you do see distressed deals, it's because the owner is basically giving up and putting his hands in the air. It's like, I don't know what to do because my people don't want to pay. It just depends on who the owner is and how aggressive they want to get. I'm going to tell you, I've raised $120 million since 2011, and it is my duty to protect that money. It's my duty to make sure that I get the rent collected that the tenants have agreed to pay. And I would do everything I can legally to get that cash. And I'll tell you what's happened. Our collections have increased when our landlord liens have started. And we have people who were squatting in our apartments who haven't paid since COVID started. And they're behind like 14 months or whatever it is, like $14,000. It's not fair to everybody else. It's not fair to you. It's not fair to me when we got to make our mortgage payments and our tax payments and our insurance payments and our utility payments. And you're going to sit there collecting free money when we all know you have a job. So it just depends on whether or not the ownership gets aggressive. And I can tell you, if it's a choice between me or them, it's not going to be me and my investors. I'm going to push hard. And what's happened here, Haley, is that the moment they hear that we're getting aggressive, guess what they're doing? They're giving us the keys back. They're giving us the key back, and they're going to say, no, I'm going to write off that delinquency and I'll start over somewhere else. So they truly weren't homeless. They truly weren't having issues. They just don't want me taking their brand new Samsung TV.
Hmm. Nice, interesting. It's crazy, but you got to keep up with things like that because, we got to make our mortgage payments too, right?
Uh,
Um,
we have liabilities. People depend on us.
Yeah. And I love that you mentioned that about like taking care of your investors, taking care of your tenants, because like I just love this. You were literally ready to hop on a plane to go get plumbing parts. It didn't come to that because of the power of social media, but it's cool to see that, you value the people that invest with you and the tenants that, are appreciating where they live and things like
Well,
that.
the other side too, right, is that we all went into that. So the reason for that was because we all had leaks at home. I mean, I don't know about you, Haley, but I lost power, right,
Hmm.
for
Oh
multiple
yeah.
days, and I lost water because I had leaks, and I didn't realize I had leaks until I came home from where I was staying at, where there was power, and I saw a leak. I had 6 leaks, and it was miserable to get the plumber there. It was miserable to have to go through that, and I'm like, man, any owner here in Houston, Texas, or in Dallas or San Antonio, wherever, went through the same thing. And I think we realized, man, I don't want my 4,000 families to go through what I'm going through. I'm very fortunate. I had resources. I had a team. I can get myself fixed right away, but I also need to get my tenants taken care of too. And understanding and going through that pain makes it very, very clear that you got to take action. So
Hmm.
I may sound like a tough guy that we're going to go to landlord liens, but I'm going to take care of them too. Though I recognize that this is their home, and even if you weren't paying rent, you still suffered under Mother Nature like we did, and it's not right and it's not fair. Nobody should have to go through that. So we wanted to make sure that we took care of all of our residents. And so if it means that we have to get on a plane, we do it. Fortunately, we got a little creative, posted something on social media. God bless social media, so we could do that. And within 12 hours, we had the parts. By the end of the day, yesterday, all but one property had water restored. And today, by the end of today, all properties have water and have hot water restored as well.
Hmm. That's awesome. Yeah, it's been crazy. And personally, I'm a part of my neighborhood Facebook group here in Houston, and people are offering up parts. Plumbers are coming in from out of town, family members. So yeah, gotta love Texas because we really band together.
It's really interesting. I was at my little boy's soccer game yesterday, and I was hearing these families, and this is in the West U area, and I was just overhearing their conversation, and some people haven't had a plumber been able to go out to their place yet because there's that much demand, there's that much load on the plumbing base. I'm proud that we got all of our 4,000 families taken care of, in less than in 1 week from what happened. And they were hearing that they're on 5 different plumber lists, and the first one that can't get out there till March 4th. And I'm like,
Mhm.
wow. So when I heard that, I contacted my group, my plumbers that we had hired because we had outside help. My guys couldn't have done it all by themselves. I want to thank all my construction guys, our construction vendor partners. And I sent them, I said, hey, I'm going to share your information with these people. And if you guys have capacity, please go help them. Nobody should have to be without power or basic services like water. Even cold water would be fine. But to not be able to take a shower in your own home, that doesn't feel good.
Yeah. And that's if you're lucky and if your house didn't flood from a pipe
Yeah.
bursting, but
Yeah.
that's another conversation for another day.
Yeah.
We have one more question. I think this is
Yep.
probably a good one to end it off of, make one last little point here. Roger wants to know, what class and cap rate are you looking for when you invest?
Yeah. So traditionally, we look for value add deals. And those are going to be typically your Class B, Class C deals built probably in the 1970s and 1980s. And today in Houston, Texas, the cap rate is somewhere between 5.5 and 6% for those kind of deals. We are looking at somewhere in the range of 6 to 7% return on an annual cash flow basis. But by the end of our ownership period, which will be somewhere between 7 and 10 years, we are looking at a 3x return. That means if you give me $100,000 by the end of that whole period, which is depending on what we decide on, 7 and 10 years, we should be able to 3x your money. We're going to 3x your money and produce that cash. We're going to 3x your money using the magic formula. $1 divided by the cap rate of 6 equals $17. As I mentioned to you earlier in the presentation, a $10 rent bump on a 200-unit property can create $400,000 of valuation. That's how we're going to do it. Those are our projections.
Hmm. Nice. Awesome. Well, Roger or Robert, sorry,
It's
the guy
okay.
that asked the question's name was Roger. Robert, thank you so much for joining us tonight. As you guys can probably see, it's been a long week over here for us. But before we sign off for the night, do you have any last kind of thoughts or comments that you would like to leave our audience with before we sign off?
Yeah, I'm going to tell you, look, you're not going to find those great deals like we found in the Great Recession. Where I was buying deals at 24,000 a door, 15,000 a door. Today's deals are anywhere from 80,000 a door. The last two were 80,000 plus. The deals that we're looking at right now are somewhere between 90 and $100,000, and that's because people want to invest in apartment deals. They realize what survived COVID. So if you can't invest yesterday in something, the next best time to invest in multifamily is today. So get your money working. I promise you it will change your life, because you've never seen what investing in multifamily can do for you if no one's ever explained it to you. You can create long-term wealth. You can create cash flow, because remember, you got to ask yourself this: if I don't get up tomorrow, will I still get paid at work? What happens 20 years from now when I can't work like I used to, or I'm tired, or I want to take time off? Will you still continue to have income coming in? True wealth is the number of months that you can survive, on your savings, right, without having to work. Well, if you invest in multifamily, you've got cash flow coming in. And if you got the right operator, he understands the magic formula. He's going to create wealth in your appreciation, equity appreciation. And you can refinance that out and start all over again, just like our investor X, who was able to take $100,000 and turn it into 1.2 million.
Mhm. Awesome, Robert. What a great point to leave off of for the night. So, guys, if you have more questions, don't hesitate to reach out to us here at Quest or Robert and the Rockstar team. What's your website? Is it rockstarcapital.com? You guys have a lot of information there. And be sure to check out their webinar next week that I will actually be guest speaking on March 2nd. It's the day after my birthday, so be sure to join us. And be sure to check out Battle of the Case Studies happening tomorrow night at the same time, 6:30 p.m. Central Time. And our lovely moderator, Nicole, has put our contact information there in the chat just one more time. Robert, thank you so much for joining us tonight. I hope this week is not as hectic as last week. And I hope you guys have a great week, and I will see you next week.
It's starting out a lot better. Thanks, Haley, for having us. On behalf of Rockstar Capital, thank you, and everybody out there. And if I didn't get your question, you wanted me to help you with that, hey, send me an email at robert@rockstar-capital.com. That's my personal email, robert@rockstar-capital.com, and I'll get an answer for you.
Awesome, Robert. See you later. Great to have you here tonight.
Bye, everybody.